Ladies and gentlemen, for the theme address and presentation, I have the privilege in inviting Mr. Bimal Jain, Chairman, Indirect Taxes Committee, PST Chamber. Please put your hands together to welcome.
Honorable Chairperson CBEC, Mr. Rajeev Saha, Madam Rasmi Burma, our President, Senior Vice President, Secretary General Saurabh ji, Commissioner GST CBEC Cell Upinder Gupta ji, learned Speaker of the Day, Mr. Saty Poddar, Mr. V. Lakshmi Kumaran, Mr. Sujit Ghosh, my colleague, Mr. N.K. Gupta, co-chairman. Ladies and gentlemen, very good morning to all of you. I'm starting the day with a theme presentation. Why we are here today? What is our objective? Where we are heading for? So in my theme presentation, I have made category which I'm going to highlight and we are going to deliberate today. First, I'm going to say why we require GST. That is the important one for all of us. Why we need GST. Then we talk about GST model for country India. Dual model we are talking about, but what is the model for India and how it is going to converge from existing indirect taxes to GST regime. Then we will take up revenue neutral rate. Chief Economic Advisor, late panel has given certain suggestion, recommendation. Let's see how it works out from taxability perspective for goods and services. Then I will sum up my presentation with certain open issues and suggestions. And I would like to highlight those suggestions for the kind consideration of Chairman CBEC. If we can have clarity, what will happen to those open and transition items in GST? We all know today taxes are being levied in terms of Article 246, 7 schedule to the Constitution of India, Union list and state list. Under Union list, we got custom duty, excise, service tax majorly. Then education cess, secondary higher education cess, though it is subsumed for excise and service tax purpose, but still continuing under custom duty. And new Swachh Bharat cess effective from 15th November 2015. Product-specific cess, automobile, coal cess, research and development cess. These are all central levy. From state perspective, we got value-added tax. We got CST, which is a central levy, but administered and collected by state government. Luxury tax, entertainment tax, inti tax, octroi, LBT, local body tax, over 50 crore rupees in Maharashtra. Then stamp duty. So many indirect taxes are existing today, but if you look at trade, industry and commerce, we majorly got manufacturing sector, then trading sector, trading of goods, then we got service sector. When we talk about manufacturing, excise duty applicable on manufacturing, along with a deemed manufacture. So deemed manufacturer applicable for goods specified in Schedule 3 to SETA, like any process packing, repacking, labeling, relabeling, alteration of retail sale price is the deemed manufacturer. So we have to think what will happen in GST. Under excise, we got different rate, 2% without SANVET, 6%, 12.5%, 18%, 24%, 30%, different rate altogether. From valuation perspective, we got transaction value, but transaction value we all are aware in terms of Apex Court judgment in the case of Fiat India. Even penetration of market can be extra consideration, includable in transaction value. MRP based product, production capacity based. We got exemption, absolute and conditional exemption. And then we got excise free zone unit in Uttaranchal and Himachal, absolute exemption. Jammu and Kashmir by way of refund with a value cap. So what will happen in GST? We got classification under CETA, Central Excise Tariff Act. So much of divergent law and procedure under excise. When we move to service tax, what is taxable event? We all know rendering of services. But still service tax applicable on advance money received because of POT rule, point of taxation rules. We have moved from positive list to negative list regime from 1st July 2012. Now all the services are taxable except negative list, 16 services today, and mega exemption list, around 47 services. Service definition, which was not there for last 18 years, very first time provided on 1st July 2012. What will happen to this definition of service in GST scenario? Any activity carried out by a person for another for consideration and includes declared service, but shall not include transfer of title in goods or immovable property, deemed sell, transaction in money or actionable claim, service provided by employee to the employer. We got valuation and abatement, like Rule 2A applicable for works contract, Rule 2C of valuation applicable for outdoor catering and AC restaurant. We got abatement notification 26/2012 for 12 specified services. We got reverse charge and partial reverse charge. So much of divergent practices. So start thinking what will happen in GST. Whether reverse charge will continue in GST, whether partial reverse charge will continue in GST, just pause and go ahead. Then we got value added tax. Applicable on transfer of title in goods, includes deemed sell, Article 366(29)(a), works contract and AC restaurant. VAT has replaced the sell tax scenario, but what happened today if we are having office in 30 states? We have to follow divergent practice, no uniformity, neither in terms of VAT rate, though it was initially decided that all the states would be keeping floor rate same, 1%, 4%, 12.5%, 20%. But today, unilaterally states are changing their VAT rate, and that's the reason we got imbalance of trade across the state. So in India, if we are having offices in 30 states, divergent practice, law and procedure for registration, payment of taxes, your monthly return filing, annual return filing, input tax credit provision, reversal of ITC, and different threshold exemption vary from 5 lakh to 20 lakh rupees. So it looks like we are working in 30 countries in Union Territory of India. So we are in existing regime. Do we want to have solution? Yes, we all are looking for. We really want solution. On top of it, we got double taxation and cascading. Double taxation is what? Excise and service tax applicable. Do you know there are certain transactions where dispute persists, that excise duty is also being charged when service tax leviable, like drawing and design, software, supply contract including erection, commissioning and installation, service tax and VAT, construction contract, IPR, IT software, right to use of movable goods, works contract, AC restaurant, our burger and pizza, has got VAT and service tax both together. Double taxation, cascading still existing today. Today, excise charged by a manufacturer, credit not available to a VAT dealer, or VAT charged by a VAT dealer to a service provider can't take credit of VAT, or vice versa. Service tax charged by a service provider, no credit to a VAT dealer. Cascading, entry tax, octroi, luxury tax, those are divergent tax, but no credit available. Hence, cascading is there, tax on tax. So we all are looking for GST. So I'm just touching this slide, which is very much important for all of us. Why we require GST? GST required to done away multiplicity, double taxation, cascading. It will bring uniformity for taxable event on supply of goods and services. So manufacturing will go away, sell will go away, service will go away. It will done away with the classification issues existing today. Valuation would be uniform. Uniformity will come in procedure, registration, payment, return filing, adjudication, appellate proceedings. So uniformity is coming out. With this process, there will be boost to the economy. And that's what our Honorable Finance Minister is talking about, incremental 2% GDP growth by bringing GST in the country. At the same time, it will facilitate Make in India by making One India. So today we are doing business in 30 states. We still perceive we are doing business in 30 countries altogether. So it will facilitate Make in India by bringing uniformity and creating common and national market with no trade barrier. So let's look for GST. This is what summarization of why GST. What is GST, by the way? We understand. GST means goods and services tax applicable on supply of goods and services. So new term supply is coming as against manufacturing, sell, and rendering of service. It is applicable on each stage of supply chain on value addition with seamless flow of credit. That is what expected, ultimately to be borne by consumer, and GST is a destination-based consumption tax. So we are moving from origin-based to destination-based. So it has got its own meaning. I will justify what are those meaning altogether. Now, the model which we are looking for. We all know we are looking for dual GST model, concurrent dual GST model. But across the world, there are 5 major prominent models. National GST, where central levy taxes with the revenue sharing with the state. Australia and China follow this model. State GST, USA, only provinces are charging taxes. Non-concurrent dual GST model, central levy taxes on services, state levy taxes on goods. Concurrent dual GST model, both central and state will levy taxes on goods and services. And Quebec model, which is being followed in some of the provinces of Canada. But India is heading towards dual GST. What is dual GST? We got 2 kinds of transaction, intrastate and interstate. On intrastate supply of goods and services, both central and state will levy CGST and SGST respectively, of which seamless flow of credit would be available. In case of interstate supply of goods and services, IGST would be applicable, which is central levy, sum total of CGST plus SGST, of which credit would be available. Today, excise duty charge and CST charge on interstate transaction, no credit available. Tomorrow, IGST credit would be available, but one rider. There would be additional tax of 1% for a period of 2 years on interstate supply of goods. Yesterday, we had interaction with the Honorable Finance Minister, and PSG Chamber of Commerce has raised this question. This additional tax, which is non-creditable on interstate supply of goods, would be there. Honorable Finance Minister was candid enough to reply that if trade wants and all the manufacturing state agree to, they will done away with the additional tax of 1%. This is a laudable one, appreciating one. If it is going away, cascading will not be there in GST. Let's wait and watch. This is what interstate supply of goods and services. Moving forward, RNR, revenue neutral rate. Our chief economic advisor has given recommendation, said RNR is 15 to 15.5%, standard rate of 18%. Today, we got 2 taxability, goods taxability and service taxability. If you look at goods taxability, today excise duty levy 12.5 and average VAT rate is 14 to 14.5%, around 26-27% taxes levied on goods. If standard rate is 18% on goods taxability, of course, it's a better one, good one. Prices for goods will go down. What will happen for service? Service tax today leviable 14.5%. If standard rate 18% maintained for services, then the prices for services will go up. And PSG Chamber of Commerce asked this question also yesterday to Honorable Finance Minister. Honorable Finance Minister has responded that they have not decided what would be the rate. But of course, GST Council, which will be formed after passing of 122 Constitution Amendment Bill, they will decide what would be GST rate on services. But we have to wait and watch. So after doing this RNR, I'm just touching some important line item, which is very important. And government is really positive enough. I must appreciate. They are doing their efforts, putting a lot of things for public domain, for public comments. They have come out 4 draft paper, GST business processes on registration, payment, return, and refund. I will not go in deliberating detail, but I would like to highlight some of the things for kind attention of our chairperson and special secretary and other government officials. In registration, this draft paper says that dealer has to take registration only when he crosses threshold amount. Threshold amount is not yet decided what would be threshold amount. Let's assume it is 25 lakh rupees. Draft paper says threshold amount includes export turnover and exempted supplies turnover. Sir, my pinpoint is that if let's say 25 lakh rupees is a threshold amount and a dealer having turnover of 25.5 lakh, of which 24.5 lakh from exempted turnover. Just because of 1 lakh, he has to take the registration. But normally today, if you see, threshold amount is being calculated excluding exempted turnover. First point, sir. Second, availment of GST credit. Draft paper says that any dealer who is starting supplies of goods and services, he has to take registration. If you take registration, you are entitled to avail GST credit. And what is the criteria given? Within 30 days, we have to take registration. From the date our GST liability starts. If we are taking registration within 30 days, then the credit entitlement starts from date of application. If it is beyond 30 days, then date of registration. To make it simple in terms of your understanding, let's take an example. 1st April, my liability start of GST. But I'm taking registration on 29th April, filing my application on 29th April, which is within 30 days. So I'm entitled to avail GST credit from 1st April. But if I'm filing my application on 6th May, beyond 30 days, then date of registration is the date from then you can avail the GST credit. On top of it, my pointer. If I'm making application on 29th April, what will happen for the credit from 1st April to 28th April, first part? And there may be many projects. Our liability, our output supply never start on day 1. We would be procuring number of goods and services from 1st January to 31st March. Still, I'm making application on 1st April, but am I entitled to avail credit of supplies taken prior to 31st March? Draft paper says no. So this is our second suggestion to the chairperson, sir. Coming to the payment. In payment, GST payment, they have given mode through internet banking, debit card, credit card, OTC over the trade counter, and then they have said NEFT and RTGS. But my suggestion to invite your attention, sir, this draft paper does not say that export credit script MEIS or SEIS can be used for payment of GST liability. Foreign trade policy is being announced this year. MEIS is being converged with the 5 export schemes and SEIS replacing Serve from India scheme. But as per the draft paper, it is not allowing that these export credit script can be used for payment of GST liability. Coming to the return, for VAT dealer, believe me, it's an ease of business. Today, if we are VAT dealer in 30 states, we have to follow divergent practice. But in GST, we will find ease of business. Draft paper has suggested 8 GST return. Output supplies by 10th of next month, input supplies by 15th of next month, and then consolidated return by 20th of next month. We got compounding dealer return by 18th of next quarter. We got non-resident foreign supplier last date of registration. We got ISD, input service distributor return by 15th of next month. Means ISD concept will continue in GST. We got TDS, tax deducted as source return by 10th of next month, then one annual return by 31st December of next financial year. So for VAT dealer, they will find uniformity, common return. Today, they are having divergent. West Bengal does not follow Odisha, Odisha does not follow AP. Delhi does not follow Haryana, Haryana does not follow Punjab. But tomorrow we will have uniformity. It is only problem for service provider. Service provider today filing only 2 half-yearly return. Only 2 half-yearly return. And GST is a destination-based consumption tax. Let's assume a situation, a chartered accountant doing stock audit in 30 states. Then services are provided, consumed in 30 states. GST being destination-based consumption tax, he has to take 30 registration. And how many return he has to file? GST 1 by 10th, GST 2 by 15th, consolidated return by 20th, then ISD, then TDS. So 5 monthly return into 12, 60, plus 1 annual return, 61 return. He has to take 30 registration. Today, he can take only 1 centralized registration, provided having centralized accounting or invoicing. But tomorrow, if 61 return per registration, we need to find out some solution to it, sir. That is what our suggestion. And we have given our suggestion that some solution for the service provider. Coming to the last part, refund. Refund is now getting automated, widely appreciated. Only point, again, the draft paper is picking up the existing legacy in the proposed GST regime. They are saying that in case of delayed refund, rate of interest would be 6%. But in case of delayed payment of taxes, rate of interest would be 18%. My humble submission, sir, since we are moving for biggest indirect tax reform for the country, why can't we bring parity? We all are equal partner for the trade, for the nation development. If there's a delay from the department side, we will be given the same rate of interest, what is being charged in case I'm delaying in making payment of taxes. Coming back to the last slide, which is important one for all of us. The first one is what would be threshold exemption. Excise 1.5 crore, service tax 10 lakh, VAT exemption vary from 5 lakh to 20 lakh rupees. Question comes, what would be threshold exemption? Our chief economic advisor has recommended 40 lakh rupees. Let's wait and watch what would be threshold exemption. But exempted supplies should be excluded from threshold amount. Second, what all goods and services are subject to GST? Today, we got excise exemption, product specific. More than 200 products are excise exempted. And around 96 products are VAT exempted. But tomorrow, we are going to have uniformity. So government has to come out common list of products and services which are exempted. So they have to prune it. And our chief economic advisor-led panel has suggested they want to prune it to around 90 products only. In that given situation, looks like today if your product is exempted, may be taxable tomorrow. If taxable, at what rate? That is the next question. But let them come out with the list, then only we can come back with our suggestion. Time of supply rules for goods and services. Time of supply rules is very important, sir. Now, GST applicable on supply. So what is the time? Why time need to determine? To determine due date of payment of GST. For goods, you know the concept of manufacturing, sell and rendering of services going away. So what would be POT, point of taxation, for goods taxability and service taxability? Today, sale tax applicable only on sale of goods, transfer of title in goods. But tomorrow, GST applicable on supply, even though it is not sale. So what would be the time? Important one. For POT, for service perspective, we got POT rules, rule 3 for service provider, earliest of the 3, receipt of money, or date of invoice raised within a specified time period, or date of completion of service. And reverse charge, rule 7. So what will happen for service taxability in GST regime? Coming to the place of supply rules. Why it is important? Because to determine where the goods and services are being consumed. For goods, there is no problem. We can determine where the goods are being consumed. For services, it is going to be a problem for all of us. Today, we got place of provision of services rule 2012 as a precursor to GST, but it is a central levy, no problem. You are in Delhi and giving services to company in Bangalore and services consumed in Maharashtra, no problem. It's a central levy. But tomorrow, state are going to charge GST on services. So let's imagine a situation that you get a contract from Bangalore, but the opinion you provided or services you provided is going to be consumed in Maharashtra. So whether Bangalore will get SGST component or Maharashtra will get the SGST component. On top of it, we got rule 4, place of performance, immovable property, event, and rule 9 is very specific. It is location of service provider. What happened for banking and financial services? It is taxable today from location of service provider, but GST being a destination-based consumption tax. So what happened? Customer destination need to be identified. Online database access retrieval service, intermediary service, transportation of goods, transportation of passengers. So we are awaiting draft rules to come out so that we can contribute our suggestion from PSG Chamber of Commerce. Going further, import and export of goods. Import would be considered interstate supply. BCD and IGST would be applicable. So one problem here. In import of goods today, if I'm a pure trader, I'm allowed to have refund of 5% SAT component. Otherwise, everything is cost, BCD, CVD, and customs cess. Tomorrow, BCD and IGST would be applicable, and IGST credit would be available to me. To that extent, my import becomes cheaper comparing the existing scenario. So what happened for Make in India initiative? So if import becomes cheaper, then it will create imbalance with Make in India concept. So something we have to identify when IGST credit given to a pure trader that is going contrary to Make in India. How to carry forward our existing SANBIT balance and VAT balance with seamless flow of credit. We all are expecting seamless flow of credit, but today, you know, SANBIT credit rules has rider. We can't take credit on construction, works contract, employee related, though related to the business. But what will happen in GST? We do not want such kind of provision. What we want, whatever taxes we have paid on input label should be available as a credit. And this can be used with my output liability. There should not be any rider. Coming forward, our export and deemed export benefit, let's wait and watch. There are certain transitional issues, existing issues moving from existing regime to propose those who are existing excise registered VAT dealer or service provider, how they will move into GST scenario. Simplification is being given in the draft paper. So there's nothing to comment upon, but at least we can contribute to the best indirect tax reform which we all are looking for. Road ahead, where we are today, 17 December 2015. Can we see light of the day on 1st April? Can we see a light of the day on 1st April 2016? This bill has to be passed in Rajya Sabha by 2/3 majority. Then need to be ratified by at least 50% state. Then GST Council would be formed, and this GST Council is going to decide a number of issues. So if at all we want to have 1st April 2016, we have to have passed this particular bill in Rajya Sabha. At the same time, we request government authority to come out draft GST law, CGST, SGST, and IGST, so that we can start contributing. I have read, and it is being told in the trade and media that within a month it will come out. We expect as soon as possible, if at all we want to achieve the date of 1st April 2016. And this is my summarization for the day today. We are going to discuss these number of topics, and we got learned speaker who is going to speak on all the subject matter, proposed model of GST, flawless GST in India, 122 Constitution Amendment Bill, implementation issues, how to prepare, and international perspective. So today's conference, we all are looking for that we will have constructive and positive deliberation coming from speaker and from your side. And we will have some clarity coming from government side, how they want to move forward and how we can contribute for the biggest indirect tax reform in the country in the name of GST. But I say good and simple tax. Thank you. Thank you very much.